following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time to break down the options market. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome to the Option Block, everybody. Mark Longo is out sick today, so this is Mike Tusaw. I am taking over the hosting roles for today, so hopefully I can do half as good a job as Mark typically does. Today, our guests are Mark Sebastian from the Option Pit.
Hey!
I'm sorry, applause, everybody. We'll put the applause sound effects in there, too.
Yeah,
and we have
props going.
There we go. And we have Rob joining us today from Options Express. Oh, Rob, you didn't go, hey, like Mark.
Hey.
There we go. All right. Well, let's start out with the trading block for today.
The trading block.
A little bit of news going on today. We had over the weekend we had some interesting news coming out of the Asian summit. President Obama was over there, and a lot of what they're working to do, it just sounds like to me like they're just trying to stimulate anything. From what I get from that, I mean we're in a stage to where President Obama, he had said, he was quoted over the weekend just saying that he wants to make no apologies, and those were his exact words, for trying to bring jobs and industry to the U.S. And I think it's a good thing that we're trying to expand trade. And over the weekend, a lot of things went on in that it didn't really amount to a lot in terms of the market. The market was initially excited today, and then eventually, as the day went on, it really wasn't quite as excited as it was in the morning, so to speak. So with that, there was some stuff going on over the weekend in that the Chinese president had said that he was concerned with unbalanced recoveries. And it looks like we're starting to get a few things from Japan and China confirming their ties. So there's a lot going on right now on the international scene, especially out in Asia. So that's something that I think definitely had somewhat of an effect on the early market this morning. But with that, we had a couple of other things happen this morning as well. Retail sales. Any thoughts on that, gentlemen, on retail sales numbers coming out? Did that mean anything at all?
Well, apparently not. I mean, they looked pretty good at first, a little better than kind of the briefing forecast. A nice uptick from before, right in line ex-auto. And then, it looked like everything kind of got lampooned or harpooned by, Empire Manufacturing and business inventories, which came in right in line. And I guess that kind of killed everything. But, it didn't, in line and improving. I guess that's a good thing. I mean, money's basically free right now. I think maybe people are worried that, money is this free and retail sales are not rallying the way the government's trying to make it happen. And to me, that would make some sense. That is kind of a little bit of a troubling sign. I don't know. What are your guys' thoughts?
Well, the retail sales numbers, especially this time of the year, I think are kind of on the back burner. We have, Black Friday, Cyber Monday coming up later on this month, and I think that, the numbers for October are kind of September, October are usually months that the market really doesn't jump on those retail sales numbers. in general, waiting for the holidays. And I think that other concerns about the amount of U.S. debt, and I think some of the spillover from the European debt concerns really kind of made the market kind of shifted the market's focus off those retail sales numbers, which were great on the surface, but when you get down to the core numbers, weren't all that outstanding.
Mm-hmm.
Yeah, I think so too. It's we had discussed this a little bit last week. I remember one thing that Mark Longo was even saying is that this time of year it's not a huge mover, and I remember thinking, it's not, but it could have been, and obviously today it turned out not to be a very huge issue. Couple of other things today, and gold and silver. With that, Rob, a couple of thoughts on that. I was just curious what your thoughts were with that. Silver, I'm just looking at SLV, that's down over 2% today, and gold, GLD, I have down 0.7 on the day. With that, we also have we have the euro moving south about 1% on the day as well. Any thoughts on those?
Well, gold and silver, it's just kind of an extension of last week's sell-off. We had that dramatic move last week after the COMEX / CME raised the requirement on silver after the pit session closed, where we saw the market drop over $1 in a matter of minutes. Mm-hmm. I think traders have just realized that maybe they got a little bit too heavy in silver and in gold. We're not seeing that major sell-off to the same extent in gold because of the nature of gold. It's more of an investment than silver. Silver's kind of that hybrid metal. It's a little bit industrial. It's a little bit of a precious metal. And so it's much more reactionary, and it's much more any type of economic data. If the stock market sells off, chances are silver's going to sell off to a much larger extent. And I think gold is kind of holding on a little bit with the concerns about the Ireland crisis now, where Ireland is basically doing they're trying to be a little bit different in their approach than Greece was, and they're actually trying to cut some of the government spending as opposed to taking the bailout money. And everybody's urging them to take the bailout money, so that there's a little bit of concern with Ireland. That's kind of impacting the euro. As far as the U.S. dollar versus the euro, everybody was so short the dollar going into the early part of this month, going into that FOMC meeting, where we're seeing a lot of the shorts in the U.S. dollar come off a little bit just as a result of profit taking. And the euro is one of the currencies that's really getting the worst of it between the debt concerns and the short covering in dollars.
Yeah, I think so. And the other thing that I thought was interesting about Ireland, everything that I was reading over the weekend, it seemed, every other word was something along the lines of Ireland, this is not Greece, is going to, this is not Greece, not except, this is not Greece. It seemed like every financial media was trying to just stop another flash crash by consistently saying how it wasn't going to do what Greece did. So I thought that was something that I found humorous over the weekend in reading that myself.
Yeah, no, I mean, I think it's interesting that, what the Europeans just, they're great people, but, French people striking because they're extending the retirement age 2 years, and, Greece because they don't get an extra month off and get to retire at 50 whatever anymore. I mean, I know that as kind of your regular American, I think it just shocks people what is going on. Part of what Americans are seeing is, Irish are kind of like-minded, generally hardworking. Not that the French aren't hardworking, but I feel like that country culturally is probably a lot more similar to the United States than France or Greece would be, if that makes any sense. Probably because half our populace is Irish. So
Yeah. Yeah, I think that the islands have a different the UK and Ireland have a much different approach to life than mainland Europe. In that regard, especially Western Europe. They're I have a cousin that's got 6 weeks of vacation coming up. 6 solid weeks of vacation coming up.
That's nice.
Yeah, I couldn't even imagine that.
Yeah, no kidding.
That's something.
Yeah, no kidding. But I do think that kind of all this stuff is having an effect on gold. I think when the Fed did all this sovereign stuff or not sovereign, did a lot of the the QE2 and things, people kind of bought gold into that, thinking that it was going to, just run up. And, maybe that did get a little overdone because, it's off $7. Implied vol is down on gold. One of the interesting things about gold, I wrote about this on the blog, is that it has a very, very different type of volatility structure than an equity. And actually different than even something like oil. Oil has what we would call a commodity skew, that's what I would call it, because people are afraid of the underlying going up. Whereas stocks have an equity skew, I like to call it, because people are afraid of equities going down. Gold kind of has this, I like to call it the 2 a.m. at the bar skew, which is, everybody. Well, because, and here's why, because it's, you don't have to go home, but you can't stay here. It's the way the options trade, it's because there's so many people afraid of it going up, and there's just as many people afraid of it going down. It's really unbelievable how that works. We've got a massive amount of people that have money in gold as opposed to stocks and cash. They're all buying puts. But it's not just a replacement for cash or stocks. It's also a commodity. And so you've got all these jewelers, all these industrialists that are afraid of it going up. And so they're up there buying calls. And so you've got this horseshoe that basically develops, and it's really interesting to watch gold volatility work. When gold is rallying, implied volatility skyrockets. When gold starts to tail off, like we're seeing now, you were actually seeing implied volatility soften, although we're seeing the skew, that horseshoe, soften a little bit too. So it's really interesting. So it's kind of yeah, sorry, what were you saying?
So you would say that it's typically even then, because you have the put buyers protecting their investment and you have the call buyers that are hedging their physical gold, so to speak. So along those lines, it's more even than the commodity skew or the equity skew then? Yeah,
well, not even. It kind of looks. If you remember the smile that the Grinch had during the Grinch Stole Christmas, when he is plotting and scheming, it looks sinister almost, the way the skew is structured, because it's got a flat bottom, and then it skyrockets on the put side and the call side as you get further away from the strikes, as people are coming in trying to hedge both sides of the position for as cheap as possible. So it really looks like a U is what I would say, a U or a horseshoe.
Gotcha.
So, when it softens, that horseshoe actually widens out. Imagine like a compass, people opening up a compass. When vol falls, when the price falls and implied volatility falls, that compass, that horseshoe actually widens out. It's real interesting. It's like a flower opening.
Another thing that's interesting about gold is, for the institutional investors, there are a lot more venues for them to trade gold if you don't mind trading internationally. And what we're seeing now is a lot of traders will actually maintain a long gold position, but they'll go long gold in euro terms or long gold in pound terms. And I think we're probably seeing a little bit of the rebalancing of that as well. Dennis Gardman was one of the who's a very popular commodity newsletter guy. He writes the Gardman letter. I'm sure you've all seen him on CNBC. He's actually trading gold in euro terms. So I think that we're seeing a little bit of that shift there as well.
It is. It's very interesting. With everything going on right now, with the different ways with which to trade gold, it still amazes me to this day that you see the people out there that will buy cash for gold and the people on the streets waving the signs. It almost makes me want to go there and pass them my business card to the people that stops. That type.
Yeah, well, it's really interesting. A lot of people don't know that if you go in, this was interesting. I was talking to somebody. If you send your stuff into cash for gold and say no, do you know what they do?
What's that?
They don't send it back to you. They up their bid.
Wow.
And if you say no, that's not enough, they'll do it again. They actually have 3 bids that most people don't know about. The thing is, most people are, uneducated about the process and don't realize that cash for gold will actually pay you more than what their initial offer is. And it's really interesting that, again, it's still a bad price.
Don't take the initial offer then. Good words of wisdom. All right, well, with that, let's wrap up our trading block for the day, and let's go to our odd block.
The odd block.
And welcome to our odd block. We had some unusual activity in several equities today. Mr. Sebastian, why don't you enlighten us with the odd activity today?
Well, the first one that I thought was kind of odd, and this was partly for the premium, but also kind of the space. In Nokia Corp, NOK, a customer came in and sold just under 15,000 of the December 10 puts for down to 25 cents. Obviously this is a bullish play, but it's not this stock is going to be running kind of play. It is we're not expecting this thing to fall a lot more. Okay? Nokia's certainly coming off its high. On the October on earnings, it got up to about 11. The high was 11.62 recently, but it got up to about 11.30ish, 11.40ish, and now it's trading back down to 10.30, which is right above kind of its last iteration. So somebody might be trying to take advantage of maybe the kind of a little iteration backwards from its highs, and guessing that it may start to creep up a little bit, and figured, hey, they'll take in this premium. So
it is, and that's one thing to where you can get 2.5% so long as it doesn't go down over the course of the next 32 days. So I think that's full disclosure, we don't hold Nokia, nor do I follow it, but if you like the stock, that's an interesting way of getting into it. Now, Rob, over at Options Express, are there a lot of people selling puts to get into stocks these days?
Yeah, absolutely. Now that the market has kind of come off its highs a little bit, a lot of traders are really concerned about buying the highs. So what they're doing is taking in some premium by selling lower strike price puts. If the stock happens to fall to them, great, they own the stock. If not, then they just pocket the money and then sell puts for the next month. So we're seeing a lot more of that. Usually when the market makes a good run up like it did, going into the month, we see a lot of put selling, not only by specs that are hoping to never get assigned, but also by longer term investors that just don't want to buy the high.
I think for getting into a stock, it's a way of getting paid to do a limit order, and I'm a big fan of it personally. It's one to where obviously there's ups and downs to it. If the market tanks and goes to zero, You're going to lose all your money that you have in there, obviously, but it's one to where you get paid if you don't get filled on your limit order, and it's a very attractive strategy on the long-term side of it, and I typically like it quite a bit. What else do we have, Mr. Sebastian?
Well, in MTG, all right, Magic Investments, there was a big customer roller. A customer had come in a few weeks back and bought a chunk of the Jan 2010 10 calls.
Jan 11?
Jan 2011. Yeah, not Jan 2000. No, it was the Jan 2010. They just rolled.
Talk about time decay on those.
I know. No, the Jan 11. He bought the Jan 2011 10 calls back a few weeks ago when this stock was trading well above $9. Well, obviously that trade has not gone very well as Magic Investments has kind of come off. Middle of October broke $10, made it all the way up to about $10.90, and has since come off, almost 20%. And the customer probably should have gotten out when this thing popped out, but rather than take this thing off, because he was up. He bought these things for about $1 when it was trading $9.40, and at one point, less than a week later, these were trading almost $2, and since then the stock has completely petered out. The guy rolled out of that, selling 18,000 of the Jan 2010s at about 20. Well, he sold them off at 36 cents, and then bought the March 2011 9 calls. So he rolled out and down. He did 15,000 of those, paying $1.05 with the stock about 20 cents higher than where it closed today. It's a great play because, in my eyes, if you really like this stock, because it allows you to get long a bunch more deltas, take off the 10s while there's still some premium there, and essentially, he's almost doubling down at less than double the cost, if that makes sense. He's rolling down and out so that if this thing does rally, and if he's right, he'll be he can easily make back what he lost is with this play. So, sorry.
It just has to go up.
Exactly.
It's one where you're doubling down. You just have to make sure that you have a good reason for it to go up, as opposed to just doing the old classic revenge trade, so to speak.
Yeah.
I'll show that MTG. I'll get, so.
Yeah. Well, I always encourage people that if they really think they're right and they know, and you're right, they're not doing a revenge trade. If you can double down on your trade, like really improve the profitability without kind of doubling the cost, that's a pretty, that's a smart play if you know you're right. And, this between March and January, he's picking up an earnings cycle. He's picking up a ton of time. It's really not that bad of a play at all, assuming that, obviously, the stock goes up. If the stock goes down, it's a horrible play.
Very true. And it's one where we tell people, I don't have a problem with averaging into trades. Like, let's just say, to simplify it on a stock trade, if you buy 100 shares when XYZ stock's at 50 and you buy another 100 at 45, I personally have no problem with that if that's part of the original plan and you have your cash allocated to do that as part of the original plan. Where I have a problem is when it, like you said, it's revenge trade where, well, it's got to come up sometime. It's not going to go down forever. And you keep doing that and holding on to the dream. That's when I would say that you run into some problems. So, all right. Any other stocks do we have for our unusual activity?
We have Citrix, CTXS. Okay. We saw just a multitude of put buying on the December 55s, 57s, and 60s. Customer bought, in small lots. It wasn't interesting. It wasn't one huge trade. It was just consistent system buying on the 57 puts, the 55 puts, and the 60 puts. You'll see that a lot when somebody doesn't want to reveal what they're trying to do. Instead of going in and buying thousands and thousands and thousands of these, they'll start buying, hundreds lot, 100 lot, 100 lot, 100 lot, trying not to run the vol up, hoping the market makers won't notice and that the street won't notice all of the volume going up. Now, John, you were saying that you think that this could be related to an EMC deal today?
Yeah, there's an EMC deal. EMC bought Isano, which is another cloud computing company, and I think that EMC that area has so much room for potential, but it also is getting very very saturated. We're seeing a lot of smaller entrants coming in, and I think with EMC, the only way that they're really growing at this point is buying out their competitors, where they've just basically gained a whole lot of market share. And I think that's that caused a lot of that put buying in CTX or CTXS in Citrix today. We're seeing some other cloud computing companies take a little bit of a hit, but not to the extent that Citrix did, just because their business is more of a mirror image of what EMC does.
Yeah, so, it's interesting. It's just been kind of crazy. It was all in all, I feel like there was a ton of paper today in a lot of the indexes. We saw really some pretty big put buying on a kind of a ratioed basis in things like EM and IWM and some of these other kind of sector ETFs. We didn't see any just huge put buying or call buying for that matter in really any stocks. I mean, aside from a few dividend plays today. It's real interesting. A ton of dividend plays. Things are getting slow when we start seeing massive dividend plays. It's actually one of the quickest ways to tell you something's going up. Microsoft has a 16-cent dividend going up that goes ex-dividend tomorrow. So today's the day you play the dividends. Guess how many calls traded in Microsoft today, guys?
1.9. Hold on, let me bring it up on my screen before I answer.
1.9 million calls traded in Microsoft today. Now, almost all of those, if you look, were deep in the money plays. It was over and over and over again, people trying to play the dividend. I mean, look at this.
January.
Look at November 25 calls on open interest of 39,000, okay? 642,000 of the November 25 calls traded. All right? Think about that. So we saw 20 times the volume, 20 times the open interest in terms of volume. Now, that is because of kind of these exchange caps. It kind of encourages people just do as many of these as they possibly can. At a certain point, I think it starts to kind of take away from things.
With that, we will close out our odd block for today.
The strategy block.
And with that, let's start out our strategy block. And for today, we have Uncle Mike's brother, Uncle Mark, gathering around the campfire, and we are going to talk about the exciting world of dividend plays. Mark, enlighten us, please. So like a lot of our listeners know, Mark, what would be an example of a dividend play? If I'm looking at Microsoft right now, or let's go back in time to earlier today.
Okay.
Excuse me. What would be an example of like how would I play the dividend in Microsoft?
All right. So here's how a dividend play works. Okay. Many people don't realize, but when you sell or buy an option, okay, that position if you're short an option position, it doesn't really close until the end of the day when everything settles. Okay? They don't really close it out. Okay? What you have intraday is you have a long position and a corresponding short position. You don't have a closed position. John, stop me if I'm getting any of the mechanics of this wrong, but that's the basic understanding. So here's how it can work, and here's how dividend plays are structured. Since every individual trade is kind of its own position until the end of the day when things settle, okay, I am a trader in the pit, and so is John, all right? And Microsoft has a huge dividend coming out tomorrow, okay? Tomorrow they go ex-dividend, so you have to be the holder of this, you have to be entering a trade tomorrow to capture that dividend. Well, since options have T+1 settlement, you need to enter your dividend play the day before you would need to enter that before that ex-dividend date. So then I would walk up to John and say, John, let's do a dividend play. And we would find something like the November 25 calls, which have at an 83 delta seems a little low, but if you look, when the corresponding put is less expensive than the dividend, that's usually a good candidate for a dividend play. So John and I would enter a dividend play, and here's what we do. I would say to John, hey, John, Microsoft November 25 calls. What is your bid? And John would say, I'm 121 bid for 100,000. Okay? And then I would say, sold. Then John would look at me and say, Mark, Microsoft November 25 calls. What is your bid? And I would say, I'm 121 bid for 100,000. And then he would look at me and say, sold. And then we would both exercise the calls that we just bought. So then we're actually, for that time period, short 100,000 of the November 25 calls. Now, during that day, okay, I am fully expecting to get assigned on almost all of those calls from all the other people out there exercising their calls. But if somebody that's, say, long a lot of calls forgets to exercise their calls, then John and I have a good chance of collecting this dividend. And we can basically kind of, I don't think arbitrage is the right way, but we can finagle our way into collecting, 16 cents, maybe 1,000 or 1,500 times. You know what? 16 cents, if you collect 16 cents 1,000 times, you've just made $16,000. That's a nice little trade for what is, essentially a low-risk proposition. So,
so you're basically hoping for someone to not exercise their options,
mm-hmm.
and you can get the trade that way. Gotcha.
That's exactly what it is. I'm counting on somebody forgetting to call up their broker and exercise their options. And you'll see that. You'll see, big customers will forget. You'd be surprised. But you'll also see a ton of individual retail clients forget as well, which is why it's important to have a good open line of communication a lot of times with your own, retail broker. Speaking of this, John, does Options Express have any services that kind of remind customers, hey, this is something you might want to think about, or hey, you might want to exercise these calls, or anything along those lines?
Well, we'll certainly discuss that. We have a lot of clients that call in before a dividend. And what usually happens is, somebody may have been short on a call and gotten assigned before the dividend last expiration cycle. So they'll go into to explain. We'll go in and explain the mechanics of it. And by the way, you have these calls here that are expiring in the money, or that are currently in the money, and they go X tomorrow. You may want to exercise those. But as far as the actual service, when you have the stock and it's going X, we do send out emails. That's something that we have in the pipeline that we are working to hopefully have down the road is something that they'll alert clients to possible dividend plays and options.
That's great, but the neat thing is if I'm an Options Express client, okay, and I don't know whether I should exercise my calls, can I call up Options Express and have you guys explain the conditions in which normally a person would exercise or not exercise their calls? Rob?
Yeah. I mean, we go through that question quite a bit, especially when it's it seems like there's a lot of stocks going these next few weeks, a lot of bigger name stocks as well. We have clients that go in and they'll go through. You may want to, if you do want to hold on to this stock, you don't want to call away from it. You may want to just buy a call against it. That way you exercise the call, you get assigned on the stock, still maintain your original stock position.
The other thing to kind of add to that too, not to cut you off, Rob, was if you have a diagonal spread or something like that going, and you're doing an option strategy, and if normally you're fine letting it go a little bit in the money on the front month, you might want to be mindful of the dividend that's coming out because you don't want to get assigned if you're not intending to as well.
Yeah, absolutely, and that and the covered call are the two most common ways that we see people get called out well before they.
All right, now we can use that as the intro for the strategy block. Does that work for everybody?
That works great.
Yeah. They want to. We sometimes with butterflies or other types of strategies, we may kind of hint toward, if this is something that you want to hold beyond that X dividend date, you may want to look at the put side instead of the call side. Especially if you're pretty set on price and it's a very comparable type of spread. We walk through that with a lot of clients, and that's a nice thing. We won't shoo you off the phone if you've never been through it, if you had a bad experience in a dividend cycle before and you really want a thorough explanation. Just give us a call. We'd be more than happy to help you out and walk you through it.
It's another reason why OX is the best. Ox rocks. And that concludes our strategy block. With that, let's go into our OX spread block for today.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Today we have a lot of interesting information from Rob from Options Express. So Rob, enlighten us, please.
Well, what we've seen at Options Express the last week is actually kind of people stepping back from options and futures really pushing to the forefront. Not only did we have the huge moves in the precious metals and gold and silver, But some of the other commodities that have really been moving have corrected. We had a pretty large, kind of a reversal in cotton last week. We had a USDA report come out on Tuesday, showing that we had the lowest acreage since the 1920s in cotton. At the same time that the dollar is weak around the world, and we also have Asia and some other in Northern Europe having issues with, or not Northern, but Southeastern Europe having issues with cotton. So, that's a market that's really been moving, and as soon as it gets to be like an out of control freight train, China steps in and increases their basis point or their interest rates 50 basis points, and we go limit down in Shanghai and we go limit down in the U.S. and we really see a huge reversal, and that's the neat thing about some of these lesser traded commodities, or certainly commodities that don't have a lot of option volume. All of a sudden you see these moves, and we've had a lot of clients going in and buying these puts and kind of being frustrated that the market hasn't corrected. And last week, Thursday and Friday was certainly a windfall for a lot of those traders. And going into this week, cotton was down another 200 plus points today. Another commodity that it's a vital commodity that a lot of people don't really trade. It's kind of everybody's just so focused on gold and silver. People sometimes forget about copper. We had quite a bit of activity in copper last week in the copper futures. Unfortunately, that's a market that really hasn't caught on with the futures options traders. So we have very few traders trading that, and you see the volume and open interest on those options is very low. However, those traders that have the financial capacity and the intestinal fortitude to trade the volatile copper market really kind of dove in. We passed through the $4 mark last week, which is the last two times in 06 and 08, copper got up to that level. We really sold off sharply. We have come off below that, but we had a nice rebound today with the retail sales numbers earlier today. A lot of that news, I think sometimes traders also forget to trade copper because it's more of a China play than anything else. It's as far as the base metals, your aluminums, your aluminum, tin, nickel. Copper has the strongest fundamental position. China's producing over 1% less than it did last year, and we're also seeing global tightness as some of these emerging markets and these kind of faster moving or faster paced economies like Brazil, India, Russia, China, the so-called BRIC nations, have started investing back into the infrastructure a little bit more. So it's a market that's really tight. It's a market that has really been bolstered by a weaker dollar. Some of the rebound we've had in the dollar recently has kind of caused the prices to fall back a little bit over the last couple of sessions. But fundamentally, when you look at the metal and energy markets, copper is the one that is positioned better than most anything. Some of the other food commodities have had their supply side issues. But copper has the best of both worlds. It not only does it have are we starting to deplete the stockpiles, but we're also seeing very strong demand. So, over the last week, it's been a very commodity heavy week at Options Express. So not only the precious metals and the crude oil, but some of the commodities that don't always get all the attention.
Now, with that, you had mentioned that the futures options on copper, how are they traded? Are they pit trade? Are they electronic? Or how do the futures options work on copper?
They are electronically traded, and a lot of the bigger volume, it's kind of like size trades in precious metals, and you see most of the volume happen on the screen for copper, but there is occasionally the big order that'll come through and it'll push up open interest on a strike, and that's where the pits really are useful. Some of those orders, sometimes we'll have clients that come in and, well, I want to buy 20 copper option contracts. So, putting an order on like that on a screen is just, you're going to wind up paying up to buy that option. We're able to facilitate that order with the floor and get it done at a much more reasonable rate. But it is still primarily electronically traded, but it's very sporadically traded. The big market for copper, unfortunately, is where the big boys trade is in London on the LME exchange. So we see some commercial volume, but it's primarily a speculator-driven market here in the U.S. We also do offer trading on the LME exchange for copper. But it's usually reserved for the more sophisticated traders. It is a much larger size contract. Mm-hmm. But if you have a very strong opinion and
would you make us convert our currency as well, or how does that work?
One of the great things about the LME is that everything trades in U.S. dollars. So just like London is very friendly to the greenback. The energy products there on the IP, or what's now the ICE, and the LME all trade and the base metals on the LME all trade in U.S. dollars. So you don't have to worry about making money on the trade and then getting killed on the conversion.
That's a good thing that they're doing that. So if I'm a retail trader and I have an opinion on copper, you would think that maybe the first spot to look would be I'll state the obvious, get a broker like Options Express. But with that, if I'm an Options Express client, maybe look to do the futures options on copper, but don't necessarily enter a market order on the screen. That's something that's worth calling in to make sure that I can get a good fill and you guys can negotiate that on the floor. Is that correct?
Oh, absolutely. Especially if you're putting out one or two contracts, you probably get a very reasonable execution on the screen. If you're doing 10, 20 contracts, that's definitely an order you'd want to call in, just so we're able to, get a bid and offer from the floor and get a good price for you.
That's good. That's good. Now, are there any other ways to trade copper besides just the futures and the futures options? Like, are there any ETFs out there at this point that are very popular with copper or anything like that?
Well, there's actually a base metal ETF that's become much more popular recently. Because some of the more specialized ETFs, the copper specific ETFs, there are a few of them, but you're essentially trading with yourself. There's not very much activity out there. Kind of backtracking a little bit with cotton. We had a lot of clients that kind of dove in headfirst into Bale, BALE, and the problem with some of these ETFs is they don't offer options. Like Bale doesn't offer options, and it's also hard to borrow. So if you are short, it gives you very limited. Your trading prospects are very limited. That's where futures, sometimes what you can do at times is hedge the future versus the ETF. If you're very bullish, go ahead and buy Bale or buy the cotton future. Well, if you're not extremely bullish, you can buy Bale and maybe sell a cotton future option. The downside of that is you unfortunately do have the short option requirements, but it does give you an alternative, and you can, with Options Express, you can trade everything in one account. So
yeah, it's interesting. My magazine that I'm a writer for, Expiring Monthly, we're actually doing a issue completely on commodity options coming up. So if anybody really has some interest, we're getting some really high quality writers come in and kind of talk, myself included, to talk a little about commodity options. We're gonna have a nice interview with a guy from the Mercantile Exchange and get some real interesting content. So if you're interested in some extended reading, you can go to expiringmonthly.com to check that out. So just thought I'd drop my plug in there.
There you go. Nothing wrong with that.
And just before I forget, the PowerShares base metal ETF is the DBB. For some reason, it slipped my mind for a second there, and it is optionable.
Oh, cool.
Very good. Well, that's good. Well, Rob, thank you for your segment for what's going on at Options Express. It's always interesting to hear as to what goes on at Options Express, and one of the reasons that I like it is that, to me, that's like the retail pulse of this market, and that if you're trading options, almost every retail trader has some type of exposure to Options Express in terms of having a brokerage account, or it sure feels that way anyway. And when you get a feel for what's going on at Options Express, that does give you a pretty good feel for what's going on in the retail world as a whole. So with that, we will wrap up our Options Express spread block, and we will finish up with Around the Block.
Around the Block.
All right, welcome to Around the Block. We're going to close out today with just some things that maybe you guys are looking at for the end of the week, or some things with which we're looking at between now and our next broadcast on Thursday, whether it's earnings reports, the economic calendar, or anything. Mr. Sebastian, do you have anything for us that you're going to be looking at?
You know what? It's interesting. What I'm going to be watching really intently is whether these guys try to price out Thanksgiving this week. That's going to be. I know it sounds kind of it's kind of a silly thing, but we have Thanksgiving coming up next week. Well, a lot of people don't realize that theta decay, while in the model is uniform, in the trading world, because we trade 5 days a week and theta decay is 7 days a week, it gets priced out at weird and interesting times. When we have a bunch of days off, it can get priced out in even weirder or more interesting times. The other thing I'm really going to be paying attention to, obviously, is expiration this week, right? We've got expiration coming up. Now, it's not a triple wishing. It's just kind of a standard expiration. But these monthly expirations, a few things to remember is they're nothing like the weekly expirations. There's so much more open interest on these things that you can't do a lot of these little weekly plays with the same success. So I'm going to be watching a lot of that. Obviously, we got Philly Fed and building permits and things like that, and housing starts that are going to matter. But the big things I'm looking for is, do they try and price out Thanksgiving early, and how is expiration going to play out this week? So,
now, would you be looking at December options in particular to see if they're pricing out things?
Very much so. There's the old saying that, the Monday after expiration, you get all of the buy writers. Well, there may be a lot of people trying to get out ahead of the buy writers and selling, on Thursday and Friday this week, maybe even Wednesday, in order to get out in front of the buy writers and the fact that we're not going to really trade on Thursday and Friday's a half day, right?
That is correct. It is.
Yeah.
Yep.
Friday's a half day, right? I'm almost sure.
It is.
All right.
It is. It is.
I was just making sure. So I remember it being, but then you never know when they're going to change that. So
that's good. Rob, do you have anything that you guys are looking at over at Options Express?
Yeah, I mean it's always a big week when you have when you have expiration week. We have a GM IPO coming out this week on Thursday. The pricing is supposed to come out on Wednesday, and that's that's sure to lead to kind of a frenzy of people asking about the GM IPO. You also have we were talking about the metals earlier. We have some inflation numbers coming out this week. PPI on tomorrow, and on Wednesday we have CPI coming out. Just seeing how some of this inflation we've seen in commodities, if it's actually making its way into all the way to the consumers on Wednesday with the CPI numbers. So that's kind of what I'm focused on. Maybe some of those retail sales numbers won't be as impressive if the CPI shows a big jump in consumer prices.
Well, with that, we will go ahead and wrap up our episode of The Option Block. We'd like to wish Mark Longo well as he can get over his illnesses that he has right now. And if you'd like to get some more information from Mark Sebastian on what's going on with anything that he had talked about in terms of dividend plays, in terms of pricing out Thanksgiving, go to optionpit.com. If you'd like to learn a little bit more about what Options Express does in terms of what they can do for you as a broker, services with which they offer of having both stock and commodities, and futures and options and mutual funds and bonds and pretty much anything else for that matter all in one account, check out optionsexpress.com. And if you are interested in having someone trade your account or having someone to talk with about long-term investment options and using options, assuming they're appropriate, feel free to visit our website at www.knowyouroptionsinc.com. And as always, make sure that you're checking out theoptionsinsider.com for anything else that you'd like to see in the option world in terms of unusual activity, or if you just want to get a feel for what's going on in the option world, they have a great site. With that, we'd like to wish everybody well and have a great trading week. So long, everybody.
Bye, everybody.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.